Hey guys, Brett here, author of the 3+1 Plan and chairman of YPC Group. Over the past few years, we've expanded our operations into the Middle East, Asia, Australia, as well as maintaining our significant presence in the UK property market. Since 2005, we've transacted over £250 million worth of UK property. And most importantly, we've helped people just like yourself to build thriving property portfolios. Now, with so many investors from all around the globe, I feel it's vitally important that you keep up to date with what's happening in the UK property market. And I think it's important to give you a fresh perspective, because it's all good to read the news, but actually news is very self-serving, and they're not really interested in giving you what's actually happening on the ground. It's much more about selling newspapers. If I never would have thought that sitting in my economics lectures, back at university, that economics and politics would play such a vital role in building my property portfolio, and certainly for yours too. And what I want to get across is that, look, the news is very positive one day, negative the next. So the things you're reading may not actually be the things going on the ground. So what I wanted to do today was just give you a really good, clear idea about where we're up to, where we're heading to over the next year or so. You're probably wondering, what's happening with the economy, what's happening with house prices, inflation, GDP, unemployment, mortgages, interest rates, when are they going to go up, how much by, how's London going versus the rest of the country? And more importantly, where's the opportunity, or where's your opportunity in all this? So the answer really is nobody knows, okay? Nobody knows exactly what's going to happen with any of these things. And it's interesting, because at the start of every year what I do is I write a blog, and you can check it. I've done it for the last 3 years, and I'll continue to do it every year. But what I do is I take all the property experts and I take their predictions, okay? So you're talking around about, somewhere between 20 and 30 experts on the UK market and what their prediction are for house prices, okay? Now, what you find is the range that experts make is somewhere between -30 and +10, okay? Now that's 40% difference, okay? And it's interesting because by far the majority of experts every single year, year after year, are totally wrong, okay? Very few people get it right. And it's very rare that you see one expert get it right one year and right the next year. So you've got to ask, who are these people that are actually providing the media with their stories? And really, it comes down to nobody knows. When you look at all the data, when you look at what's happening, what you're going to find very quickly is that actually you can go to one newspaper article and it's going to say the sky's falling in. You can go to another and it's going to say 15% growth. You can go to another and it's going to say interest rates are going to have to stay like this for 10 years. You get another and it's going to say interest rates have to go up straight away, immediately. So the media is not something that you can trust to make investment decisions on. It's not something that you can take as good advice or even as an indicator of what's going on in the market. Having someone like myself and the team behind me who are constantly in the market, negotiating deals, speaking with developers, speaking with surveyors, and speaking with all the people that are involved in that market, it's a much better and surefire way, okay? All right, so first of all we're going to look at the economics and politics, all right? And I want to start off with the political side of things, because actually we've got a coalition government over here, and to be fair, on the big issues and of actually running the economy, they're doing pretty well. I haven't actually had any problems with them, and certainly nothing near the problems that I had with Blair and Brown. I mean, they sold this country so short. And what it's done, it's given an opportunity, and for all you guys out there that aren't in the UK and are looking to invest in the UK, it's given you guys a massive opportunity, okay? So you can thank Brown and you can thank Blair for that. But politically, actually, the coalition has done very well. They were left with a massive deficit. In other words, they were spending more than they earned, okay? A massive amount of debt. And what they're working on is actually getting that deficit down. Now, Labor would like to think that we can just keep spending and stimulating the economy. We can't, okay? It would wreck our credit rating and a whole range of things would happen. So on the big issues, they've done very well. Now, you might say, but hold on a second, I don't agree with this policy or that policy, the NHS getting looked at. Actually, that's not the big picture, and that's not really important for us as property investors. So politically, the guys are doing pretty well, and I think, if you're watching this, you can pretty much say, yep, the scorecard's looking pretty good. The GDP, realistically, GDP is doing nothing right now. You know, we've had it drop a little bit, we've had it rise a little bit. What I would say is we're almost stagnating, you know. And part of the reason is I think we would be, you know, coming out of the recession quite well, except we've got these austerity measures, which means that basically we're spending more than we earn, we have to decrease what we're spending. And that means the government can't spend money to stimulate things. So the GDP is going to stay, and it will stay quite low, I think, until next year. I think this year, 2011, you can write GDP off. Not much is going to happen with GDP, all right? So certainly this recovery, this recession, or the recession that was, is not going to be led out by GDP recovery. It will eventually, it'll come back around and kick in, all right? Unemployment. Unemployment's one of those things, when we first went into a recession, most experts, and we've spoken about experts, were talking about unemployment's going to hit 3 million. It never did. It never even got close, okay? And that's good news for us. And one of the reasons is because interest rates were dropped so low that actually, as a homeowner, I was now paying less money than actually I was before, so I've got all this extra cash. Now, what did I spend that cash on? I spent it on paying back debt. You know, certainly a lot of it. I spent it on spending, which kept things stimulated, which meant that people kept their jobs, and that's been a fundamental, it's been awesome, because what it's done, it's allowed us to go through the recession and not have to worry about huge unemployment. If we had huge unemployment, actually I'd be a lot more worried, and this would be a totally different presentation now. Finally, inflation, and this is probably, look, the political, the GDP, the unemployment, they've all gone into the back burners. Inflation is by far the most talked about thing now in property, and partially because inflation is linked to interest rates, and we'll deal with interest rates in a minute.